Finance Minister Nirmala Sitharaman delivering her 9th consecutive budget, creating a record. And of course, as we've been highlighting here on CNBC TV 18, many measures that will deliver for the economy and for India at large in the medium to long term. In the short term, the markets have not liked the fact that the government has hiked the STT on futures and options. Remember, there is no change as far as commodities are concerned. To help us understand the revenue direction, the rationale and the reasoning behind many of the decisions taken and what we can expect now as far as the road ahead is concerned, the Revenue Secretary, Mr. Srivastava, as well as Arunish Chawla, the DIPAM Secretary. Gentlemen, appreciate you joining us here on the program. Revenue Secretary, let me start by asking you, that's the number one question. As far as the stock market is concerned, why the decision to hike the STT on futures and options? In fact, the recommendation or the ask was that there should be a reversal on the long-term capital gains tax because the Indian stock market has underperformed in the last 12 months. Why did you feel the need to hike STT on F&O at this point in time?
See, this, first of all, as you rightly pointed out, that STT has been hiked only on futures and options. Quite naturally, it needs to be distinguished from the STT on the others, and that have not been touched at all. The understanding is that both, if you look at the volume of the F&O, if you compare it to the underlying securities market volume itself, right, or the size of the GDP for that matter, it is too large for it to be considered desirable. It looks to be fairly speculative, which is not a good way to take it forward. So in some way, this increase is essentially meant to address that kind of, possible risks that may be involved in this highly speculative side of the market. And thus the raise of tax, even today, even after this increase in terms of its share of the total volume, it is very low. So the idea was to touch a specific segment. The idea is because there is a fair amount of speculation there, and that may require some kind of course correction. Quite naturally, tax policy by itself will not achieve that goal. It needs to be also looked at by the market regulator in its own way. Which means that you
believe that more measures are required to further put curbs as far as F&O is concerned? Because many measures were already taken.
Yes, so I'm not saying anything is required further. It's beyond my domain. I'm only saying it supplements what otherwise the market regulator is doing. So what we have done is what I am telling you about. I have nothing to do with what market regulator has done.
So you're saying it was not a revenue mobilization attempt, it was really an attempt to try and curb speculative activity. But what kind of revenues do you believe that this is going to net for you?
If you look at it obviously is a trade-off. At the end of the day, the raise in this rate would result in some impact on the volume itself. With no impact in the volume, if the volume remains the same, put together it may fetch us around 15,000 crores or so. But quite naturally that dynamics will play out because the rates...
Depending on the volumes.
Volumes also.
But otherwise you're estimating about 15,000 crores by way of the hike in STT on F&O. Let me ask you an overarching picture as far as revenue is concerned. There has been a concern as far as your tax numbers are concerned for this year. You're going with a 1.14 buoyancy for the next year, if my memory holds me right. There's been a lot of numbers to deal with. How confident do you feel about the tax numbers?
We are very confident and that we'll be able to achieve that. The buoyancy in taxes, in fact, post-reforms, the improvement in buoyancy is very apparent. You can see the GST numbers flowing in too. So we are quite confident that it will do well in the next year.
On GST, today we saw the number coming out just short of 2 lakh crores at 1.96 lakh crore rupees. What is the run rate that you believe, the monthly run rate that you believe we should be now focusing on, that we should be aspiring for, given the fact that the rate cuts are behind us?
You mean to say, in the sense, run rate?
The GST collections.
No, run rate would mean the growth month on month?
The growth, yes.
See, the growth, as currently it is touching 6.5% or so. We expect it to rise more. As I said, there is a lot of this GST rate, the whole structure rationalization will also be changing a lot of things, the consumption patterns, the way things are produced and sold. So we do see this buoyancy to be improving as you go further up in the future.
Okay, I'll come back to you in just a second. Let me get the DIPAM Secretary in. After a long time, Mr. Chawla, we've seen a biggish number there. The market was hoping for an even bigger number, but 80,000 crores is the number as far as disinvestment is concerned. Now, what will this include? What will this entail? What about IDBI Bank? Has that been accounted for, not been accounted for?
Okay. The number is big, and this is a composite asset monetization target. This is miscellaneous capital receipts. It includes disinvestment receipts through various modes. It includes asset monetization of other types. It includes the new securitized innovative instruments. You heard, as you know, for example, the public InvIT was approved in December, and we are hoping to launch the first public InvIT, before the end of the current financial year. It includes also certain other asset monetizations that are contemplated, including the land monetization. And you also know the Honorable FM announced the REITs facility for the public sector banks, for the public sector enterprises. And for us, all these are very happy developments, because if you look at the InvITs, they have not only matured as a source of revenue and capital resource, but launch of public InvIT takes it to a new dimension.
Okay.
It is the capital market equivalent of the risk capital. The present value of the user fee being monetized and deployed for creation of capital assets. So these are all happy developments. As you know, we do not have split targets for these because we do not want to make the markets nervous or speculate, nor do we want to create a price overhang.
Right.
The idea is that this is the overall number, and through a number of these innovative capital instruments and the traditional ones, including disinvestment receipts that we have evolved over time, we will achieve this.
But, IDBI Bank, if you can give us an update, is it likely to close in this financial year, or is that now looking increasingly difficult?
The strategic disinvestment of IDBI Bank has reached stage 3, which essentially means that technical and financial bids have been invited. I will not be able to give transaction-specific details, but I would only say that be patient. Before the end of the current financial year, in March, you will hear more from us.
We will hear more from you. There was a lot of expectation, again, Mr. Srivastava, on the back of what we heard in the economic survey, that perhaps the government would take a bolder bet on disinvestment. The economic survey went as far as to say that you could even amend the Companies Act definition of a company and bring down shareholding down to even 26% while retaining government control. Is that something that you believe that, you intend to or would like to take forward in any form or fashion? Let me get both of you to comment on that, and Mr. Chawla, I'll start with you.
Chawla.
Okay.
Yeah. Let me expand on that a bit. You see, one part of it got reported, but if you read the economic survey carefully, it mentions alternatives.
Yes.
Economic survey is an ideation document. It says one alternative is that you change the definition of a government company and bring down the 51 limit to 26. The other alternative is that you move strategically below 51 with a clear direction or a clear aim in mind. And those possibilities are very exciting. They could be strategic partnership model frameworks. They could be joint venture frameworks. They could be frameworks where the resulting entity is not a government company, but it is still a public or a government-controlled company indirectly. All these possibilities are on the table. What Economic Survey was trying to do was alluding to all these alternatives. These will be deliberated in the policy domain. And consistent with the new Atmanirbhar Bharat policy for the CPSEs, which was announced in 21-22, we will see how to weave it in, what is the best step forward, and under what conditions, under what situations.
Okay, so that's still open-ended and a work in progress, and no decision either way has been taken. Mr. Srivastava, let me ask you this. Under the dividends receipts, you've got 3.91 trillion penciled in. How much is the RBI dividend on account of this?
That's for DA to tell.
Okay. We'll put that question to the DA secretary as well. But the trade-offs that you were making while putting this budget together, it is a fairly fragmented geopolitical climate as well at this point in time. The measures, for instance, of giving tax exemptions. Nobody's heard of a 22-year tax exemption in this country so far, but for data centers and so on and so forth. What were some of the considerations that you were weighing as trade-offs as you put your budget together?
Sure, let me explain that point. What is that business model like? That's a business model under which a global cloud service provider, which is a resident somewhere else, utilizes the services of data services center across the country, across the globe, to deliver final services to the consumers. So it's a model which is very cross-national. It is not in any one place. That entity will be a resident of some country. But while delivering the service, it will be making use of services of data centers in many places. Now, if such a global entity wants to make use of data services of India, suppose it expands itself and sets up data service centers in India, then the risk they have is that their global income will start getting taxed in India. So this exemption is not for any economic activity which is happening here. This is to attract a leg of that economic activity into India. So the global entity continues to remain taxed where it is getting taxed. It puts its footprint in India in the form of a data service center. That data service center will get taxed as a normal entity. In case the data service center is a related party, we are giving a safe harbor of 15%. So 15% of the turnover will be the margin on which it will pay the tax. The second rule is the global entity, while delivering service to India, must deliver it through a reseller entity. So the revenues it is earning from the consumers in India will be at that stage taxed at the hand of the reseller entity.
Which will be an Indian entity.
Which will be an Indian entity. Both the data service center provider and the reseller entity are Indian resident entities. And both of them are going to get taxed. These two are getting connected through a global cloud-based service provider, which is making use of this data service center like many others and providing the service. That is the entity who is being exempt, because that entity, because the work or the business that it is doing in India is getting taxed at these two ends. The end of using the data service, so whatever is the income of data service center, it gets taxed. Whatever is the earning from selling the services to consumers, that gets taxed. All that we are exempting is the global entity which is delivering this service and its global income, which might get taxed in entirety or as a proportion, just because of the reason that it is using the data service centers in India. So let us take a case of something which is on the cloud and say a Netflix kind of a model, where there could be maybe 20, 25 data centers all across the world, which are ultimately, when I as a user sitting in India am accessing that service, it may be coming out from various places in the world. So linking that one-on-one is not going to be possible. So what we have done is data service centers in India will get taxed. The consumers who are buying the service, that revenue will get taxed. The entity which is connecting it all is getting taxed in any case in the jurisdiction where it is a resident. And that is the one which is exempt.
That is the one that is exempt. Now, can it or should it apply to people who have already committed? For instance, Google is committed $15 billion to be set up in the state of Andhra Pradesh. Can they benefit from this, or whatever has been done is off the table?
We have said that the data service centers will have to be as per notified once by METI. So METI will have to indicate to us which are those data service centers which satisfy these requirements. And it is important to say that the services are ultimately on the cloud. The data service center services which are being used here have to be of a certain physical infrastructure services, and the rest of the services are in a cloud. So the model of that, as well as which entity, and the fact that there should be a reseller entity in India to sell, All these things will have to be looked into, and METI will have to help us to notify those such data service
So
centers.
this is one of the many measures that I would imagine the budget is put together with the hope of attracting long-term foreign capital and also stimulating long-term domestic capital. Now, with the currency depreciation, I would imagine that there were many conversations that happened within the finance ministry on whether any quick fixes could be put in place to try and draw in more foreign capital. A, how much of a concern is the currency depreciation for you? How much of a concern is the outflow of FPI money from India for you today?
So probably that answer could be better replied by Secretary DA.
Let me get your point of view as well.
Yes,
Yeah.
so on the tax side, what we have done here is, on the side of, let's say, we look at the residents who are doing a transactional business with a related party elsewhere. So the entire IT services, which constitutes close to 1/4 of the total number of such entities, almost 12,000 entities, we have given them a safe harbor framework. The investment from outside, which is expected to come in areas like data centers, electronics manufacturing, even expertise which may come from outside, we are giving them a tax certain framework. So in many ways, as far as the tax is concerned, we are trying to make it an enabler and not be a discouragement for somebody who wants to come in, without harming our tax base, but giving them a certainty and a rational kind of taxation which enables them or encourages them to do the business here, which in my view will obviously help to attract, for example, electronic manufacturing. Now we have created an arrangement under which a safe harbor, which will be just about 0.7%. It is, I think the rate of tax would be around 1% in Vietnam. So the safe harbor will help them to do just-in-time manufacturing of electronics, which is definitely going to attract more of such businesses in India. So tax is essentially being used as a tool to ensure that it becomes an enabler rather than a discouragement.
But how concerned are you about flows, inflows as well as outflows today, foreign inflows and foreign outflows?
This answer I would...
I'll leave to the Economic Affairs Secretary, but Mr. Chawla, let me ask you about one of the announcements that came in from the Finance Minister, the restructuring of PFC and REC. Now, what does restructuring mean exactly? Is it pivoting its business model, or is it pivoting the way that these companies operate? It could be bringing these companies together. Is it privatizing these companies? I mean, what are we talking about?
You will have to wait for it to evolve. Budget speech is an announcement of intent. The purpose, the concept behind the intent is that we need a central agency for financing of the power utilities, the power distribution companies, the generation companies at both center and state level. The central utility, the central financing facility is an NBFC regulated by the RBI. It acts as a lead financer. And when it moves forward for a particular project, the rest of the banking sector, the financial institutions are crowded in. The idea is to achieve economies of scale at the central level so that you have a more integrated, unified agency doing this job in a more productive, efficient and scaled manner. To be able to crowd in. The exact precise model will evolve with time.
So if I were to read between the lines of what you're saying, you're saying that you need scale. So would it be fair to assume that you're actually looking at a combination, a merger perhaps?
See, this is a decision which will be taken by the respective boards and the respective ministry. They are considering all options, but the statement of intent is clear.
Restructuring is the statement of intent. What direction or shape or form that will take, we're not sure at this point in time.
It is for the respective entities, their governance, their boards and the ministry to decide.
Fair enough. We'll leave it at that. But OFSs, IPOs, what should we now expect realistically from you, Mr. Chawla?
This year or next year? Or both?
Both.
I would say we always keep 3 to 4 transactions live at any given point of time. And seeing the market conditions, we move forward one step at a time. You will see 3-4 more transactions, good transactions happening within the current financial year.
Okay.
And maybe double that amount in the next year.
Okay. The risks that you see as far as your revenue projections are concerned, Mr. Srivastava, before I let you go.
The risks that I see, the risks quite naturally, revenue will be eventually a result of the way economy does. So I wouldn't say it as a risk, but that is one parameter on which it will depend.
Around 7% means what? 6.8, closer to 7, 6.8. Is that the number that you're working with as well for growth?
For the GDP growth?
Yes.
Yeah, the GDP growth nominally has been taken at 10%.
Yeah.
So we go with that.
Okay, go with that. Well, thank you very much, Mr. Srivastava and Mr. Chawla, for joining us here on CNBC TV 18. Appreciate your time. We will, of course, pore over the fine print and come back to you with more questions on the CNBC TV 18 budget verdict. But for this evening, we wish you both the very best of luck and thank you very much for joining us.